All right, welcome back to Problem Solver Politics. I'm your host, Cardon with Cody the Oracle.
Hey, everyone.
And today we're going to talk about the VAT tax. Andrew Yang proposes paying for the UBI using a VAT tax. Now, for those of you that don't know what the UBI is, basically it's a free $1,000 a month for every citizen in the United States of America. And a VAT tax is a value-added tax that is basically a small tax that is placed upon every conversion of value in the manufacturing process of a manufactured good. Because the elevator pitch is very simple. The robots are coming. In many regards, they already have come. But the robots are coming to take away our jobs. And when the robots take away our jobs and Amazon opens up a 300-job fulfillment center, that's great. But all of those mechanisms, all of those drones delivering all of our packaged goods and those driverless trucks have taken away 5,000 jobs, because the most common two positions of employment in America are retail clerk and truck driver. So when all of a sudden we have robots delivering our goods and UPC codes and digitized everything, doing everything for us, those jobs, not only do they go away, but so does the tax revenue that we use to pay for our social services and that we use to pay for all of our, well, not our schools, because that comes from property tax largely. But besides a person's human dignity of being employed and the importance of self-worth and self-perception, there is also the practicality of the fact that their tax revenue goes away. So how are we going to fund our society? Okay. This is a really good question of how are we going to fund our society, especially when we propose something as audacious as giving everybody $1,000 a month. So here at Problem Solver Politics, we're totally open to new ideas and new things, but we want to, I don't want to say trust but verify or fact check, because that sounds very cynical, but we want to run the numbers and do the math, make America think harder. So first we have to understand what is the VAT tax and how does it work before we can know whether or not the UBI can take it over. So Cody, really fast, why don't you catch us up as to what is the VAT tax and what is Andrew Yang's proposition to do with it?
All right. Well, always I like to just jump right ahead and go right to Andrew Yang in his own words, what he says in his own yang2020.com. He says, as president, I will add a value-added tax at 10%, which is half the European level. Over time, the VAT will become more and more important to capture the value generated by automation in a way that income taxes would not, as you were saying. This VAT would vary based on the good to which it's applied, with staples having a lower rate or being excluded and luxury goods having a higher rate. We'll get into more why that kind of makes sense, but also could kind of tilt the numbers the wrong way. And then use the VAT revenue to pay for the freedom dividend, which you mentioned already. And I mean, that's what the big takeaway from here is. There is a VAT already in the world. Europe is currently running with the value-added tax.
Yeah, because we're obsessed with doing things like Europeans do.
I just people are already doing it. This isn't like some radical idea no one's ever tried before. A lot of countries are already doing it, and like he said, he's going to be running it at about 10%, which is the proposition. In Europe, yeah, there's some countries as high as, I believe, 27%. So that is considerably lower than what we see in Europe. So while they are doing it, they're doing it at about double the rate as he's proposing.
Yeah, so what a VAT tax is, just so you guys understand, is first let's actually go to let's go to the Investopedia graphic here, if you could pull that up, Cody. The VAT tax is actually very simple. Oh, I'm sorry, not the Investopedia one, the Heritage Foundation graph. This is a very common and well-known image, I should say, that describes what a value-added tax is, because a lot of people think, oh, it's just a tax on robots. But that's not a fair way of describing it. In the most common graph that we can, not graph, but in the most common diagram we can find, infographic. They use an example of a shirt. That when a farmer picks a bunch of cotton and gets it all baled up and gets it all packaged good and everything, he is going to sell that for $1. With a 10% Andrew Yang VAT tax, that means it will really get sold for $1.10 to somebody who wants to make material. Then that person's going to put it into its machines, and it's going to make it into thread, and then weave that thread into cloth with its certain thread count and its certain special color and all that other stuff, and is then going to convert that cotton into cloth and sell that cloth for $5, okay? at which point he's going to have to get a 10% VAT tax of 50 cents. However, since he bought the cotton for $1.10, 10 of which was taxes, the $5.50 that he sells it for, he's actually only paying 40 cents in taxes because he gets to keep the 10 cents that was already paid for the cotton. Okay. And then that cloth that was purchased for $5.50 is going to go to I wouldn't say a tailor, but let's just say a suit company or a shirt company. And their robots are going to cut it up, and then they're going to sew it into different parts, and their machines are going to make it into a $10 shirt. And that $10 shirt is going to get sold for $10 plus 10% VAT tax makes it $11 because you have to add $1. Okay. But they already paid 50 cents in VAT tax. So that gets credited to them. So really, they're only paying 50 cents of value added tax. At which point, that shirt then gets sold to Macy's as a retail shirt and goes onto the counter for $20. Somebody buys it for $20 plus the value added tax of 10% of $2. However, they get credited the $1 that the clothing manufacturer already paid. So if they're 10%, they're actually only paying half of that, about 5%. So every step along the way, the person that's buying the good and then adding value to the good by processing it, refining it, assembling it, or manufacturing it into something else pays a tax. And that little bit of tax is added and credited along the way. There's many different ways of implementing a VAT tax, but the most common one is called the credit receipt or the credit income way of administering a value added tax. Okay. Now, there's all kinds of pros and cons to this that we're actually going to discuss in another video because it's a worthy topic in and of itself. But at the end of the day, this does do some interesting things and changes the ball game a little bit because now all of a sudden we have less of a burden on sales tax, which can be a very good thing because I'm a huge fan of consumption taxes, and the VAT tax is an actual consumption tax based upon the consumption and the change of goods instead of being a tax upon income, which is our income tax, which I absolutely hate because you're punishing somebody for working hard and making money. Okay. Meanwhile, people that just sit on investments only have to pay 14% taxes for capital gains, while people that are in the middle class have to pay like 29.97%.
I think we can complain about taxes for the next 4 hours if we really wanted to.
So at the end of the day, we're going to truncate the pros and the cons against this. The cons are, and the thing I fear, and I wonder if Andrew Yang has really thought this through. I'm sure he's thought it through. I'm not saying he hasn't thought it through, but no one's done this in America ever, not even on a small scale. So we have no precedents that we can actually apply this to.
But I mean, people are doing it today, and it's been proposed before in America. It's not that radical.
It was proposed in the 90s, and then it was reproposed a bunch when Barack Obama ran up the deficit.
It was proposed way back during the Vietnam War as a means of funding the war. So it's been floating around as an idea for some time now.
Hit us with your opinion on this because I want to hear what you think about this before I spew more of my own nonsense.
Well, I mean, from basically the way I understand the value-added tax is everything gets a little bit more expensive just due to all the different exchanges and the slight tax increases. I think really the question just comes down to, at the end of the day, is the slight increase in the cost of goods offset by the good the government does with the raised, and I can't even say that with a straight face. That's my problem with it. Is giving the government more money never works. It never solves anything. They always find a way to waste it. So that's the issue. Yeah, it might be a really efficient way of generating some extra revenue without really hitting. Because one thing I want to go to.
Well, the question is it a way of taxing the robots?
Well, no.
Because what I'm interested in.
This is one of the interesting things. Originally, when they brought this up, they did a big study to say, okay, should we implement the VAT?
Okay.
And one of the big things they brought up about this is the fact that a value-added tax would be neutral. It wouldn't affect any particular industry, meaning it can't be seen as a move against anyone in particular.
I don't think
if you generate value-added, you are paying the stat, and if you purchase things, you're affected by it. So that's one of the reasons they originally argued for, and that is one of the pros as well.
Both the Congressional Business Office, and multiple organizations have done hypothetical research into whether or not the VAT tax would work or it'd add revenue or whatever. And the best numbers I came up with in terms of additional revenue was about 150 billion, or 3% of what is our GDP. Okay. So it's at best neutral. I should say at best helping us 3%. At worst, maybe hurting us 3%. Most people say neutral.
The question is, like, is buying a T-shirt for $20.50 instead of $20? Does that offset the? And here's the thing: if the government used that money well, I would say not at all.
Yeah.
I'd gladly give them that money. Well, because they don't. It's just one more thing. I think that was really kind of funny bringing this up. That was one of the reasons brought up originally as well against the value-added tax, was that it would increase the complexity on administrative staffs. It'd make things worse and harder to administer. And yeah, people are going to be trying to get around it. And again, it comes to the point: how much of that $100 billion we generate just goes right back into enforcing and implementing the value-added tax?
Yeah.
That's the real issue here.
Well, and the other thing is, I want to know, will this truly tax the robots? Because at the end of the day, we do have to show some concern. Basically,
well, it must. Yeah.
We developed a tax system that was basically based upon an industrialized, wage-based, hourly wage-based income stream, in which we expected people to go work in factories and they make a certain amount of money, and then we would tax that income. And since everybody kind of was pretty much the same in that regard of making either salaries or hourly wages, then that system worked because of the homogeneity of the working class.
But that's what I mean.
Okay?
Like, this would, of course, tax the robots, because if you own a company that makes cotton into T-shirts, okay, yeah, I'm not paying employees anymore, but my company still makes cotton
but see, this is my question.
T-shirts.
Can you pull up the video really fast of how cars are made now with all of the robots that's cruising along? Basically, my only question to this is how can it be abused by government, and also just how can it be abused by incompetence?
Well, just wasted. Yeah, exactly.
And
wasted by government.
My question is when you look at this video and you see a piece of steel going into the assembly line, and then all of the robots automatically welding it, all of a sudden crimping it, all of a sudden bending it, rolling it, and then vacuum forming it into what is going to become the hood of a car. That used to be the job of 20 men, but now it's the job of 10 robots. Okay? And are we saying that the value comes from changing the steel into the bent piece of metal, or into the welded piece of the metal, or both? Or are we just doing the value added of the car once it comes out of the factory? I'm not sure. And the question is, what's fair to the company? Because ultimately, we would love a society in which robots were doing all of our hard work, and all of us just worked on honing our artistic talents and our photography skills and our, our friendships and our family lives, and we let the replicants do everything. But I'm just wondering if this can truly pay for itself. And when I look at the math, I'm a little bit worried, because
but wasn't one way of looking at it is perhaps they would just look at the car as like raw materials to car as one large value. And then,
in the example of the shirt, we didn't look at it as cotton to shirt.
But it's much simpler. I think a shirt, we went cotton to linen, linen to shirt, or cotton to raw cotton to refined cotton.
Okay.
To shirt. Like, I mean, like, I wonder if they would just say raw materials in, car out, in the value of the car.
Yes. So I guess what I would need to know is I would need to know more. We now understand better the definition of what is the VAT tax, but I'm looking at the working class of America, and according to the last census, there was about 72 million children, or should we say minors, in the United States of America. And then we were looking at about almost 200 million older and lower working age, basically meaning lower working age is 18 to 44 years old, and then 45 to 65 is the higher working age. But let's just say, 150 million of those people qualified for the UBI, which is the Universal Basic Income.
But remember also,
all of a sudden you're talking about $150 billion of revenue necessary.
Almost 100% likely less than that number because of how the UBI will be implemented.
Okay, so then what's the math on this, Cody?
I mean, I don't know. You could probably take maybe like 8-9% and just remove that from the population, because basically people that are currently receiving greater than $1,000 a year in benefits from the government can either not opt in and not get any of it, or give up their other benefits. I wonder if they can kind of negotiate, but anyway give up benefits for $1,000. So if the government's giving someone $1,900 a month in benefits and they'd rather take $1,000 of cash, functionally it's plus $900 to the government. So, and there's just going to be some people that'll say, look, I'd rather take my $1,400 in benefits than $1,000 cash, and they're removed. So almost assuredly it would be less than that number by a few percent. It would still be roughly that number, but I'm just saying it definitely would be less. There's no way every single person would opt in.
So at the end of the day, we all know now what is the VAT tax. I think what we should do is continue the discussion below. Please comment, like, subscribe, share this video. Let us know what you think about the VAT tax. Yes, there's been many countries that have done it in Europe with a wide range of results that wouldn't
they still do it, but yeah, it doesn't mean it's good.
Yeah, exactly. So now you know what the VAT tax is, exactly how it would tax the robots, and hopefully compensate for the switch to AI over real intelligence from human beings. Let's continue the discussion. In future podcasts, we're actually going to talk about the pros and cons of the UBI and how, according to our best theory and analyses from similar countries, even though no country is exactly like us, what it would do to our economy. This is Problem Solver Politics.